This is trading lesson 7, delivered by Twegbe Eizoge Lucky. This is for forex traders, cryptocurrency traders, stock traders, option traders, and the likes. And the work commences as this. When there are several bars with large ranges that form a tight sideways trading range, entry on a breakout is risky because most breakouts will fail due to the magnetic effect of a tight trading range. Whenever a trader is uncertain about what to do, the best decision is to wait for more price action to develop. It is not good to short a breakout of a trading range when many of the bars in the trading range are relatively large and have big tails, because the odds that the breakout will fail are high. Pay very close attention to the close of every bar, especially for the entry bar and the bar or two later. If the entry bar is 6 ticks tall, you would much prefer seeing the body suddenly increase from a body that was 2 ticks to one that was 4 ticks in the final seconds of the bar. You will then likely reduce the number of contracts that you scalp out. This is true for the next couple of bars as well. If there are strong closes, you should be more willing to swing more contracts and hold them for more points than if these bars had weak closes. It is always better to just watch and trade off one chart, because sometimes things happen too quickly for traders to think fast enough to place their orders if they are watching two charts and trying to reconcile the inconsistencies. A second entry is almost always more likely to result in a profitable trade than a first entry. If the second entry is letting you in at a better price than the first, be suspicious that it might be a trap. Most good second entries are at the same price or worse. A second entry trader is someone entering late, trying to minimize risk, and the market usually makes him pay a little more for that additional information. If it is charging you less, it might be setting you up to steal your money in a failed signal. If you are fading a move, for example, shorting the first reversal in a strong bull trend where the move had about 4 consecutive bull trend bars or 2 or 3 large bull trend bars, there is too much momentum for you to be placing an order in the opposite direction. It is better to wait for an entry, not take it. Wait for the trend to resume for a bar or two, and then enter on the market's second attempt to reverse. When the momentum is strong, it is better to wait for a second reversal setup before trading counter trend. A big bull trend bar after 5 to 10 bar bull trend bars is a buy climax and is likely to be followed by about 10 or more sideways to down bars before the bull returns. If you look at any chart and think that if you had taken the original entry, you will still be holding the swing portion of your trade, then you need to enter at the market. The market has a clear always in position, and you need to participate in the trend because the probability of making a profit is high. However, you should enter only with the number of shares or contracts that you will still be holding and had you taken the original entry, and you should use the same trailing stop Your stop will usually be larger than what you would use for a scalp, and you therefore need to trade a smaller position to keep your dollar risk the same.